Hello, and this time on the Mortgage and Protection Podcast, Paul is back from Henchurch Lane to explain how a joint mortgage works if one person is self-employed and the other is employed. Thank you for joining us again, Paul. How are you doing?
Great, Tessa. How are you?
Good, good. I'm all good
Good.
too. Thank you. Right, let's see what questions we've got here. So, first of all, of course, people would like to know, can I get a joint mortgage if one person is self-employed and the other is employed?
Absolutely. It's very common. Lenders will combine both incomes to work out how much you can borrow. They'll assess each one of them completely differently. And the employed partner's income is obviously quite simple. That's going to be coming from pay slips or P60s.
Hmm.
Whereas, the self-employed partner's income is going to take a bit more paperwork, but not an issue from an application point of view.
Right, okay, so that's great news there, and hopefully that sounds reassuring. So, moving on to the next question, can you get a bigger mortgage if one person is self-employed, and how much can you borrow as well?
Not necessarily bigger, potentially more flexible. It's going to depend on how much provable income that they both have. So most lenders, like I've probably said 1,000 times, you can generally borrow somewhere between 4 and 5 times your combined annual income. Some a little bit higher, some a little bit lower.
Hmm.
So if your accounts are strong, being self-employed doesn't hold you back, and sometimes it can benefit you because of the access to the income that you've got and how the setup is within the limited company. So I wouldn't suggest bigger, but certainly it does give you maybe more options from an affordability point of view, at least.
Hmm. Right, okay. Well, there we go. That answers that anyway. So, how does one of you being self employed affect your eligibility for a joint mortgage? So, any differences here?
Well, it doesn't make you ineligible. It just changes how you're assessed. Like I mentioned in the previous question, lenders are going to look for at least 1 or 2 years of the trading history for that self-employed partner.
Hmm.
And the key is going to be the consistency and how they prove and how they evidence that income. So it doesn't really affect the eligibility, I would say. It just affects the administrative part of the application process from an evidence point of view.
Hmm. Right, okay, which makes sense there. So, let's continue on then. Are there any specific requirements or restrictions on joint mortgages if one is self employed and one is employed? These are very wordy questions, Paul.
They are, yeah. And do you know what? I think it's people being concerned
Hmm.
about the same sort of thing, just asking it in many different ways.
Yes.
So, again, the answer is going to be it's mostly around evidence. The self-employed person is going to need to show accounts, tax returns, whereas the employed partner is just going to be pay slips. So otherwise, other than that, it's sort of business as usual, really. No special restrictions on the mortgage itself from one of you being self-employed and one of you being employed.
So again, that's good news there, and hopefully this is all sounding reassuring. We do like to cover all of the questions, even if there's
Absolutely.
crossover, don't we? Yeah.
Absolutely.
So again, with this next question, what obstacles might self-employed individuals have to navigate when applying for a joint mortgage with someone who is employed? Anything else to add here?
Yeah, okay. So maybe some other things that we'd generally talk about would be when people are asking specifically about self-employed people, what sort of things do we see that cause issues from an application point of view? And they're going to be the same things that you come up against, when you're doing this with one self-employed and one employed. So fluctuating income, that can be quite a common one. So lenders do like a bit of stability when it comes to income because it makes it easier to assess.
Hmm.
So if your earnings are sort of bouncing up and down, they'll likely take an average or use the lower if it is on a downward scale. So yeah, that is a big one that we come across for self-employed applicants, and
Hmm.
timing as well. That generally matters with accounts. So if you've had a dip recently, and then you submit a set of accounts, that can make a big difference to your affordability overall. So what we tend to find is evidence, which is what we always touch on, how difficult that is, fluctuating income and timing for self-employed people. They're
Hmm.
all the sort of factors that I generally tend to see have a big impact on the outcome of applications. And
Hmm.
lastly, as we touched on previously, the credit status as well. So
Hmm.
if people aren't really paying attention to that and keeping up to the terms and agreements of their other accounts that they've got elsewhere, that can really hinder them from a mortgage perspective.
Hmm. Okay, so lots of main key points there to take away from the episode and to really bear in mind. Now, let's move on to this question. So, what should self employed individuals know about the income assessment process for a joint mortgage application with an employed person?
Okay. So generally speaking, they're going to take the latest 2 years tax returns or your company accounts. So some lenders, as we mentioned before, some lenders are going to look at your latest year, and if that is justifiable for them to take because the accountant has given them confidence in that, then
Mm,
that's great. However, if it is not justifiable or it's going down or it's going up to the point where it looks out of place when you compare it to your previous years,
mm,
then it's those sorts of fluctuations that I would say are going to not raise red flags, but there's going to be a lot more questions around it. And it's going to be more difficult from an affordability perspective to see where the outcome is going to land until an underwriter have got their hands on it and they've really made, really made their sort of final decisions on that. So what I would say is have a chat with a broker before you make any final decisions when it comes to accounts. Sometimes having a broker, an accountant, and your accountant liaise with one another can
mm,
make sure that your intentions are aligned. So, an accountant, generally speaking, is going to help you mitigate as much tax as possible and potentially even lower your income. Whereas a mortgage broker naturally is going to want to have as much income to play with as possible, or
mm,
as much as they need to fit your goals and your intentions. So
mm.
having those kind of preliminary discussions with one another before you look to make final decisions can be really helpful in these sorts of application processes.
Again, something to bear in mind. Lots of great tips on this episode. And speaking of affordability, you touched on it there. What factors do lenders take into account when assessing the affordability of a mortgage for joint self employed and employed applicants? I need to get my breath there, Paul. These are long
It's a very good
questions.
question, isn't it? Okay, so I'll try and make the answer as short as possible as to not overcomplicate it, but I generally
Mm,
don't have much luck in that regard, do I? Tend to ramble on a bit, but they'll look at your combined income.
mm,
Not only your combined income, though, that's not really as deep as it goes. It's going to be your spending habits as a couple. It's going to be what debts you have in the background. It's going to be your credit history and whether or not you have dependents and what their ages are. If you've got any benefit income that you're going to throw towards the equation as well. So
mm,
it's not just about what you earn, it's about what you have left over each month and what your expenses and the bigger picture looks like as a household. Maybe that's a good way to phrase it. But
mm,
yeah, the bigger picture, they're really looking at, they're uncovering a lot of stuff about you here. So
mm.
it's good to have all of your ducks in a row when it comes to these sorts of applications as best you can.
Okay, I think you summed that up pretty well, pretty quickly. So there we go.
Thank you.
Right,
Yeah.
let's move on again. Are there any specific types of joint mortgage products designed for where only one applicant is self-employed? That's interesting.
Yeah, not specific product, but some lenders are more self-employed friendly. So that's where, again, where a good broker is going to make the difference. If there's something specific about that self-employed applicant situation that's going to stand out to a particular lender, they're going to be able to suss that out quite quickly.
Hmm.
Employed is pretty vanilla stuff. So it's always going to be around the self-employed applicant where the advice really comes in, I would suggest.
Hmm. Right, okay, which again makes sense there, but that is also good news as well. So just following on from that, can you benefit from any government schemes when applying for a joint mortgage when one person is self-employed? That's very specific though, isn't it here?
It is, yeah. So I imagine what's happened here is, people are concerned by looking at these sorts of schemes and then just worrying or being concerned that actually they might not be eligible for it because of their type of employment. But
Hmm.
you can definitely have access to schemes like shared ownership and first homes. Generally, anything that tends to be put on the table from the government or any other housing associations, they'll normally be accessible if you're self-employed as well. So don't let
Hmm.
that be the reason that you're not looking and inquiring a little bit deeper into these sorts of schemes.
Hmm. Okay, well, that is great news there, if you were wondering. So, are there many lenders or mortgage brokers for joint mortgage applications where one is self employed? So, great question for you, Paul.
Yeah, there's only one broker for self-employed mortgage applications.
There we go. Shameless plug.
Yeah,
Perfect
no,
for one.
there are there are certainly lots of lenders, even mainstream lenders, that do this sort of thing every day.
Mm.
So it's more about matching you to the right lender and their criteria rather than finding a special one. But I would say, from a broking perspective, a mortgage broker will either be someone that claims to be good at self-employment, or someone that isn't. The
Mm.
more complicated your self-employed scenario becomes, the more experienced you should be looking to source from a mortgage broker's perspective as well. So if
Mm.
you've got, what we touched on earlier, multiple companies, multiple streams of income, potentially a little bit of bad credit sprinkled on just for fun, then that's the sort of case that you really do need to be sourcing out someone that really does
Mm.
um, you know, warrant themselves in this space as a very good self-employed specialist broker.
Mm. They've got to know their stuff, haven't they?
Absolutely.
There we go. Thank you for that. Now, you've demonstrated, as you always do, how a mortgage broker can help. But just lastly, have you got anything else to add? Or do you think we've covered all that we can here?
We've covered, I think, pretty much everything, and it
Mm.
just comes down to how someone with the experience can present your case to an underwriter to give you the best chance of getting the outcome that you want. Really,
Mm.
the amount of research that goes into these cases definitely shouldn't be overlooked. They can get very complicated, and in some instances, the lender that we end up coming back to the table with will be a country mile better than the next best lender.
Mm.
So if the person that's got hold of that case isn't doing the due diligence, you could find yourself in a much less advantageous position. So I would just urge you to do that little bit more due diligence yourself and source someone that that's worth their salt when it comes to self-employed mortgages.
Okay, well, there we go. A pro tip to end on there. Thank you for that, Paul, as always. Thank you for
You're very welcome.
listening. Thank you for watching. And I'm sure we'll be back with another episode soon.
Sounds good to me. Speak to you soon, Tessa.
Speak to you soon. Bye bye.